Fixed or variable? Which one should you choose in 2026? Here is my answer. I would not automatically choose fixed. In fact, if I were financially comfortable, I'll give serious consideration to variable rates. But here is the catch. Choosing the mortgage isn't really about choosing a rate. It is about choosing who takes the interest rate risk, you or the lender. Fixed. If you're choosing fixed, you pay premium to the lender to transfer the risk back to the lender. If you select variable, you accept the risk in exchange for potentially lower rates and greater flexibility. So here is the 5 points you have to keep in mind. The biggest difference, let's make it real simple. With the fixed mortgage, your interest rate is locked for the term. So if rates go up, your rate does not. You are basically saying, give me certainty. I want to know what my mortgage payment is going to look like. Variable rates, they are different. In variable, your rate can move as your lender's prime rate changes, especially when Bank of Canada announces. So if the rates fall, you can benefit. If the rates rise, you take all the risk. Point number 2, why I am interested in variable right now. Here is why getting variable is the best thing we can do. The Bank of Canada's overnight rate is currently sitting as 2.25% and has been held there through July of 2026. And in the current market situation, variable mortgages are priced below many fixed options out there. So here is the question. Why pay premium for certainty if you have the financial cushion to handle some rate movement? Point number 3. Who should choose fixed rates? Now, I would absolutely consider fixed if, number 1, your monthly budget is tight. Number 2, a rate increase would create financial stress. Number 3, you simply want peace of mind. Because saving a little interest is not worth it if you're lying awake every night worrying about your mortgage payment. And for many first-time buyers, fixed can be a smarter choice. Point number 4, the hidden issue, breaking your mortgage. This is one of the things when people shop around with their own banks, they don't ask this question and the bank give them a little bit discount on the rates, but they get them when they break the penalty. Here is something many people don't think about. What happens if you need to break your mortgage? Maybe you have to sell your house. Maybe you have to refinance. Maybe you have to move for work. Maybe your financial situation changes. So variable mortgages generally have much simpler breaking penalties, typically 3 months of interest, while fixed mortgages can involve a complex interest rate differential calculations where I have personally seen in 20 years penalties range anywhere from 8 to 10,000 all the way to 25,000. So if there is a reasonable chance you will need flexibility, variable deserves a serious consideration. Point number 5. The question I would like to ask you, number 1 is, which one is better, fixed or variable? Instead, I will ask you these 5 questions. Can you handle a higher payment in case rates go up? How long do you accept or expect to keep the mortgage? Third, could you sell or refinance before the term ends? Fourth, how much emergency savings do you have? And do you value certainty more than the potential savings? So here is my 2026 final verdict. If I had a comfortable income, strong emergency savings, and could tolerate rate fluctuation, I'd lean towards variable rates. But if I were the first-time buyer with a very tight monthly budget, I will lean towards fixed rates. And there is also a middle ground. A shorter fixed rate term, such as 3 years, can give you payment stability without locking you for a 5-year term. So final takeaway, remember this: fixed equals you pay for certainty, variable you accept the risk for potential savings and flexibility. You are not simply choosing a mortgage rate, you are choosing who takes interest rate risk, you or the lender. And this decision could be based on your finances, not what your neighbor chose. So if you're buying or refinancing in Ontario and want to know which option make more sense for your situation, follow me for more straightforward mortgage and real estate education, and leave comment: fixed or variable, which one would you choose in 2026? Thank you.